Ira Epstein of Linn Associates with your financial market wrap-up for this Sunday. And we are now on October 11th, 2020. Wow. We're 23 days away, roughly, from the presidential election. It is with a Biden lead that in the polls continue to grow. The president's got to do something in these last 3 weeks if he's going to narrow it in. You see all the TV shows, ridicules, doing different things, social distancing, whatever. But as we know from the old election with Hillary, can't count anything. You got to wait to the very end, and there's always those hidden Trump people that don't want to say they're for Trump, but they vote for him at the end. We'll see where this all comes in. Will they prove the pollsters right or wrong? That's going to be the big question. But the marketplace, well, it's all over the board because we're trying to figure out, can we get a COVID relief package? If you listen to Mitch McConnell, no. If you listen to the words coming out of Ms. Pelosi, maybe. And it's an ever-changing game. Don't know. What is the market counting on? Regardless of who wins, the market is going to count on there'll be a relief package after the election. Second, we're going to be taken over by the nomination for the Supreme Court and the Senate, as you know, of Ms. Barrett. And as that goes on, of course, we'll see the parties going at each other. This shouldn't be going on, blah, blah, blah. But it's going to go on. And my guess is you're going to get her into that, and then the game will turn more towards the presidency. So this week's going to be one of these weeks that's taken over by a lot of that data. When we take a look at the S&P on a monthly basis, you're not far away from the all-time high close on a monthly basis. You're 60 some odd points away. That's about a day and a half of volatile action. You rarely go up 100 points in the S&P on a daily basis, but that's on a monthly, as you know. On the weekly chart, you can see where you're at in relation. More important to me is we had this correction. It never did make it to the 18-week, and it's turned back up. So now, because of this pattern, the market is out of this correction phase, and the question is it going to make a run for the high? That's exactly how I'm viewing the market right now. When we take a look at this chart, you can see the big swing. You got up here towards 3,600, fell back to the 3,200, and now you're about halfway between the two numbers, okay? When you take a look at this week's rally high, which was 34.4750, it took out this break, this high point when you fell down. So that was the bounce back point. And where did the market stop? Right at the 18-week average of closes. That was all that it owed. No more than that. Remember, the other chart when I'm looking at closes was closes only. This is taking into account a lot more information. Where could this market be headed? Well, I'm going to view the chart as, number one, not in a trend. You broke the downtrend that you had that was never confirmed because you never did close under the 18-week average. So we had the swing line down, fought by the fact that the market stayed over the 18-week, held this number. If you fall, I'll still look for support at the 18-week average. And if you rally, I'm going to look for resistance at the upper Bollinger Band. In terms of momentum, it had been pointing down, but now the market has turned that, as you can see. It hasn't begun to turn up. It has flattened itself out, and as you can see, the market has now stepped into that sideways zone. It's going to be volatile. That's what it's telling you. It might be trendless in a good part of the week here. We're going to get waves back and forth. You're already seeing volatility has picked up. Margins have picked up by the exchanges, not just the brokerage firms. But last week, the CME group raised the margins on a number of their indices. In the Nasdaq, the pattern's a little different. This one can turn bullish like that. What you have is lower highs and a lower low that went, again, back to my line in the sand, that 18-week average. Should this market get over 11,604.75, you would get a pattern of a higher low, a higher high, calling for a challenge of 12,106. Now, we'd have to see if momentum picks up here. It too flattened out. If the market keeps dropping and doesn't take that out, support could come in right through here. If the market gets through 11,604.75 and then fails again during the week down, you continue the bear trend. So I'm going to repeat, very volatile week ahead. In the Dow, just like the S&P, you got up high enough now to negate the downtrend. Therefore, you've got lower highs, lower lows, and that was changed on this week when you got up through this past high. And now the question is, what does the market want to do with it? Doesn't want to make a run at the upper Bollinger Band or fall back to the 18-week average of closes. I don't look for the markets to get materially under the 18-week average of closes. And if they go up, I'm going to look for resistance at the upper Bollinger Bands. In the Russell, you went up to that upper band already. You can see how the market held, as I told you. What else did I say during the week? When we were looking at charts and when I putting out my subscriber videos, I was pointing out that I think the long-term traders, a lot of cash on the side, had moved in on these moving averages. I used the term, and you heard me say it, you buy them as a long-term trader and you light candles at night. I'm not being rude, but where would you put a stop other than you just decided that's a value area for me? And as a chartist, that's not what I would teach, but I realize that that's what money that's on the side does, and that's where I think they've positioned themselves. Having done that, I do think that same money that was buying here under the 1500 level is now taking some of that money off the table at the upper Bollinger Band. If you don't, what's the point of the Bollinger Band? So that's what I think is going on. We'll see if I'm right or wrong. In the bond market, you've got the pattern of lower high, lower low, and what did you run into? That lower Bollinger Band. I don't think the pros want to press this market that much right here. Why? Because 95% of the time, the market's going to stay within the band, and this market has a good history of paying attention to it when it does get to that number. 10-year notes, same thing, and the 5 years, the same thing. That does not mean they're not all still bearish. They are. That flies in the face of everything going on. COVID cases have, if anything, gotten worse around the world. Now, when I say around the world, I mean in Europe, America. I know people in Brazil, it's out of control there from what I'm hearing. And we are seeing in different states, you're going to read over this coming week, that the numbers are just picking up. Europe's problem is they did not clamp down enough, and you're going to see real serious issues. They're already that way with hospitals at capacity in different countries in Europe. In the dollar index, you've had a rally back up that failed against this 18-week average of closes and a slip back. You have the swing line up. You've stayed under that 18-week average. Momentum, which had been pushing itself to the upside right through here, got up towards that 18-week average right there, and now has pushed itself back into the neutral zone. If you get under 92.75.5 on a weekly chart, you break this pattern of higher lows, higher highs. It doesn't start a bear pattern, but it certainly does damage there. Should the market close over 94.59, let's call it, this 18-week average, that becomes quite friendly in this market. In the eurocurrency, the market had been in a correction phase, and it's getting now its bounce. It never did get close enough for me to say it made a challenge of that 18-week average. Anything over 119.24, powerful in the sense that you break this correction phase in the marketplace. Doesn't begin an uptrend. Canadian dollar went down to long-term support of the 100-week, the 18-week, got its legs under it, if you will, right there. It's still in a downtrend on the swing line, but the bias is up. Again, battleground, no trend. Japanese yen, correction phase, but hasn't taken out the 9,400 level to say that the market's, broken that uptrend phase that it had. Momentum is still pointing down. Momentum often leads price, so I don't see anything that's really friendly here, but I'm waiting for that challenge of that 18-week average. That would be around the 94.19 level, and getting under 9,400 breaks this pattern. So in other words, currencies have been correcting for almost a month. And now the question is, will they start trending or stay in that sort of sideways phase, as you can see that I just showed, into the election? My guess is they're going to start trending, but when? Bitcoin, lower highs, higher lows, not much going. I get bullish on any move over 11,080. That will then give me higher lows, higher highs, over the 18-week average, putting into play for me the possibility of 12,307, and I'd be wrong if you got back under 10,140 if the bullishness happened. Close under 10,379 and you have to get bearish because you'd have lower highs, lower lows, assuming you don't take that out and you're closing under that 18-week average. In Brent versus WTI, the market's just sort of hanging here in that $2 zone, not doing an awful lot one way or the other, and the trading range is narrowed in dramatically. Look at this. You have been trading against the 18-week average for the better part of 5 weeks. The market had been in a downtrend, actually is in a downtrend, but hit the downside target right back here and has come back to what I call that line in the sand. You can negate the downtrend by taking out 4381. The Saudis this week said that they are rethinking their idea of pumping out 2 million barrels a day more starting in January. Why not? You're looking at a market that is 43.34. Their budget calls for $50 crude. If COVID stays the way it is at this point, and until we get a treatment that works, be a treatment vaccine, they've got a problem getting up to that number. If anything, if it spreads throughout the fall and winter, it gets even worse for the demand cycle. So hearing them say that is not a surprise. In the U.S., the same thing. You made your run at the lower Bollinger Band, came back to the 18-week average. I can't get away from the fact that you're now in what I call a pipe. These type of actions, when you get into them, start churns. And the market just sort of spins in them typically. You don't just break out of them 1, 2, 3 on a typical basis. I can't tell you that this won't be that, but that's what I see. And I see the same thing in the gasoline market. It has no pattern. It's got a higher high, lower low. Challenges of the lower Bollinger Band now going nowhere. Runs back to the 18-week average of closes, not going far either. So you put it all together, you got to wonder what if. I can tell you that I don't show you all the charts here that I do to my subscribers. But with my subscribers, I have the heating oil. And the heating oil certainly looked for some pretty cool ideas. It looks to me as though the seasonals are going to start taking over, and with winter right around the corner and fall where it's going to get away from these warm temperatures. I know if you're out west you think I'm crazy, but that's basically what's going to happen in the other parts of the country. We'll see what happens. Now, as you know, I spend my time giving you more than this. Trust me, this is the leader to my subscriber video. That's all this is. The subscriber video is where I start you off every day with the touch of the fundamentals. What reports are coming out, what the market's looking for, where they're at. At 5:40 in the morning, I start doing my futures video. That's when I record it. It's published before 6:30 typically. I cover 40 charts there. On the spiders and ETFs, I'm now up to about 37 charts. I've added more of them since I redid these numbers. You offered an introductory price of $16.90, but let me tell you what I do in them. You get what's coming out, then I take you in and I say, I want you to buy here, I want you to sell here, I want you to have a stop at this number, this is your profit objective, this is what I want you to do on the weekend as a longer term trader. Yes, on the weekend I put out a whole subscriber video for them looking only at weekly charts with buy and sell recommendations in 37 ETFs and all the futures markets. So if you're looking for a comprehensive package, this is the place to look at it. The cost, not very much. For these two videos, each one lasts about 20 minutes, $16.90, and you're not into a contract. You want to stop? You can stop like that. The only thing I ask when you stop, there's a little form fill out. Tell me why you stopped. You might not like it. You might think I'm not doing the job. I need it because it helps me to be better. It's that simple. In any case, I'm Ira Epstein. You go to www.iepstein.com under the word research. And it tells you all about it. You can also subscribe individually to just the futures, just the ETF Spider, either one that you'd want to go with, that's fine. But it explains how it works, what it's doing, everything about it. I'm Ira Epstein. You have a good day. I will see you all tomorrow.